Hello, my name is Naz and I am here to talk to you today about asset allocation and diversification. The question of how we divide our investments is vital to our financial well-being. And key to this is knowing the difference between asset allocation and diversification. Some think that asset allocation and diversification are the same thing, but they really aren't. An investor may have excellent diversification but poor asset allocation, or vice versa. To keep unnecessary risks to a minimum, we need to have optimal levels of both. So, for example, let's start with asset allocation. So asset allocation refers to the actual act of investing in different categories of investments called asset classes. That is, we pick which assets we want to have in our portfolio. Generally, investors choose from stocks, bonds, mutual funds, commodities, and so forth. And then diversification, on the other hand, is the process of balancing these classes and within these classes so that they offset one another amid any market volatility or changing conditions. So to further elaborate, let's say we have one stock, one bond, and we hold, let's say, a precious metal gold. But in our first year, the company that we invested in for the stock bankrupts. Now we don't have that part of the investment anymore, and our value of the portfolio has declined by that much. The second year, the bond also declines, the bond also fails, let's say, and then we don't have the bond anymore either. However, on the third year, we see a rise in the precious metal, the commodity that we had invested in, and that brings the appreciation of the precious metal, brings the portfolio back to its initial investment value. But the same year that the precious metal had increased in value, the stock and bond had also increased. And now that we've already lost our stock and our bond because the companies in the previous years have gone bankrupt, we can't really take advantage of the appreciation in the third year because those companies have gone bankrupt. But had we diversified within each of these asset classes, instead of choosing one bond and one stock, if you chose various types of bonds or various types of stocks within each asset class, then we would have had some exposure, so when the market did appreciate, we would have been able to take advantage. So in summary, just to say that the diversification is essentially further segregation within the asset class